Hello, this is James Smith at GANanalysis.net. Today we're looking at IEF, which is the iShares 7 to 10 year Treasury Bond ETF. So if you're looking at bonds, might be something you'll look at. And from the high back here in March of 2020, we draw the GAN fan down, and the 1 by 1 is the red line. You can see here this sell-off found support on it 3 weeks in a row. So we have a 108-week cycle due, and it's starting to move up. But you might say, well, that doesn't mean anything. But hang on for a second. Time is more important than price. That's what you want to look at. And the 108-week cycle is a big deal. The fact that you bounced off the GAN line in sync with the 108-week cycle, that's a big deal. So you have a time and price setup for reversal in trend. So that's what we're looking for is time. So another thing I would draw your attention to, these vertical lines, they are square outs. Where you cross the level of the prior swing low, from this high, we draw the 1 by 1 down. It crosses the level of that prior swing low, October 2018 low. That is when you can expect a change in trend. You see how powerful that was. It gave us a rally. You can see over here, it gave us a high and a sell-off. And you can see here, it gave you a high and a sell-off. So it works pretty well. And if you look out here to January of 2029, I know that's way off in the future, but trust me, that will be some sort of turn. But for right now, we're more focused on this 108-week cycle and the fact that you bottomed in sync with a 52-week cycle, 52 weeks down from high, 288 weeks from this prior swing low. So that's a big cycle. That's what gave you an important cycle low, and this gave you a low. So you see what we're doing here. We're stair-stepping higher with bonds. You got a low in sync with the square out, then you got a higher low in sync with the 288-week cycle and the 52-week cycle. Then you broke through the 1 by 1, rallied back to the former low, and then sold off and found another higher low on the 1 by 1 in sync with a 108-week cycle. This is what we look for. It's building for a big move up. So you can draw your own conclusions about why that's going to happen. I think it's going to be a recession. You might have a different motivation, different reason. And from a chartist perspective, it doesn't really matter, does it? We don't care why bonds are going to rally. All we care about is that if it does rally, we get long and we make some money. Now, what if we're wrong about this? Well, if you take out this low here at 92.78, that's where the 1 by 1 is. That is, from a GAN perspective, that would invalidate this trade. You would look at it and say, okay, it didn't work. So if you were trading this, you'd probably have a stop at 92.50. And this coming week, it'll be down at 92.66. So maybe you'd make it at 92.25. You would have a stop just below this 1 by 1 line, with the idea that if it takes it out, okay, move on to the next trade. This one didn't work. So that's how it works. Now, one other thing you could do is you could look at the mid-season turn. Halfway between the fall equinox and the winter solstice is what we call the mid-season turn. That happens to be November 7th. That gave you a low. Well, just dumb luck, right? It's all coincidence. We are told by the fundamentalists that this has to be random chance. This is a random market. You cannot look for patterns. Well, here's what I'll tell you to that. Look at this low in sync with another mid-season turn. Look at this low in sync with another mid-season turn, and a high in sync with a mid-season turn, a high in sync with a mid-season turn, a low in sync with a mid-season turn, a low in sync with a mid-season turn. I think you get the idea. The point is, The only reason you can call it a random walk is because you haven't looked at the chart. And people go along with that. Now, one other thing I would point out, if this is an inverted head and shoulders pattern, this would be your left shoulder, your head, your right shoulder. Perfect symmetry. It's telling you pretty obviously this thing wants to rally. So again, there are plenty of ways to slice and dice the data, but I'm telling you, this looks good to me. You can argue with me, and I could be proven wrong, but as long as you have a stop loss, you're probably not going to lose a lot. And if you're right, hey, maybe it goes to 102, the Fibonacci retracement, maybe it goes to 106, 50% retracement. We don't know how far it will rally. All we're saying is you're going to get some kind of rally. So if you keep an open mind about it and it starts to move up, hey, you go with it. It's as simple as that. GAN is not that complicated, but a lot of people want to make it out to be complicated. All you're trying to do is marry time and price. Where time and price come together, you have a setup for a change in trend. In this case, you've got the mid-season turn, you got the bounce off of the GAN line, and you got a 108-week cycle. Time and price. That's what we want. And you got this pattern here. You've got a reverse head and shoulders, and you've got a series of higher lows. It looks very symmetric to me. So I like it. It looks good to me. Will I get my calls right every time? Probably not. I mean, I've gotten it wrong plenty of times. But the point is, as long as you practice a certain amount of discipline, you won't get hurt that bad if it goes against you. So I hope this has been helpful. If you like this presentation, give us a like, give us follow us on social media, and good luck with your trading.